What is going on, everybody, and welcome to another weekly update. And this week was a very interesting week. We got the FOMC minutes, essentially the notes from the last FOMC meeting in December, which opened up a lot of different discussion on the amount of rate raises that are going to occur this year, possibly, and the amount of or the pace of tapering that will be going on for the rest of the year is extremely hawkish in the approach, which kind of had a sticker shock effect to the market. And we had a massive pullback right after those notes came out on Wednesday. We've been really flat for the past 2 days. That news essentially dropped us right in between the 20 and the 50 on the daily on the SPX. Now, going forward, we have earnings just around the corner. But that being said, what do we have coming up? I think the biggest thing coming up into the next couple weeks is you're going to have the new FOMC meeting for this year. The first one for this year is on the 25th and 26th, I believe. That will give us more of a time frame. That is what the market is really looking for. Being said, I believe the market is starting to price in a rate raise. That's not saying that when that rate raise actually happens. Now it's kind of at a point where the Fed will come out and do an emergency rate raise if they feel that inflation is getting out of hand. They feel other things are getting out of hand. So being said, when that does occur, we're going to see a bigger pullback, a bigger corrections, particularly in tech. We've already seen massive hit in tech already. I think that will continue. I don't know if going into earnings, the earnings modes are going to be very different. You're going to only have, I think, your industry leaders that are going to be running. I think mid caps and small caps will continue to get beat down this year. But being said, value, I think there's going to be a lot more push in value, a lot more push in some of the banks. Right now, Bitcoin is plummeting. Right now, gold is plummeting because of what is occurring and not really understanding what the time frame is with the Fed. The market. Every word that comes from the Fed, the market weighs heavily on every word that's coming out until we get that first rate raise. Once we get that first rate raise, again, market will become numb to any new news that comes out from that point. They're aware of the other two rate raises possibly coming. So once that first one comes in, once that initial price adjustment happens, then I think we should be good to go and start pushing back up. I think even tech will come back up and start running. So some big earnings coming up. The biggest ones, we want to start watching banks, see how the banks are doing through this whole thing. So you got Goldman Sachs, Bank of America. Those are to about 2 weeks out. What I want to start doing with these earnings is try to give 2 weeks out as well as the current week. That way you can kind of prep for those and keep an eye on those. Another big one is chips are coming up. ASML, I really want to watch ASML coming into this week. If we start plummeting more and start basing, I want to get a position set for the following week for that. Again, a lot of different things have been beaten down. And it was just when you didn't think they could get beaten down anymore, they're getting slammed even more. But I think this year will still be really big once the first rate raise comes in and we start adjusting to some of these things. I think the back half of this year will be really big. I think you'll see a really strong bull run towards the back half of the year. Right now, again, we're still trying to work out a lot of different kinks with what's going on during this historic time. So Again, you got Netflix on Thursday, the 20th. That'll be the first big tech coming out. A lot of other earnings haven't been released yet. Your Googles, Apples, Tesla, none of that's been released yet. When that comes out, I'll start letting you guys know and find out when that first big tech week is. Assuming it's probably on the same week as the Fed FOMC meeting. So I'm thinking around that 25th, 26th might be when that happens. If not, it'll be the week after that, more than likely. But that will essentially give us our move. After that initial move happens, if we start selling, then we will, I think, have some kind of push to the upside until that first actual rate raise occurs, and then we'll get a correction at that point. Events this week, we got Beige Book, federal budget. Again, there's a lot of different core CPI. I don't think any of that stuff matters anymore at this point. We know rate raises need to start happening. Jobless claims, those are the biggest things we're starting to watch. The Beige Book, again, notes leading into the FOMC meeting. What are they planning on doing? That will be critical this week. We might see the market flat a lot. We've been getting big moves in the morning, and then the market just kind of dies. I think you're going to see a lot of that towards around Wednesday. Again, Thursday, you might get a little pump, but I think your biggest event this week is going to be that Beige Book. Federal budget, what they're planning on doing is what's going to really matter. Yes, core CPI and all that stuff really matters, but again, at this point, I think we're over that because we were trying to gauge when the rate raises were coming. Now we know when they're coming, and now it's just trying to figure out the time frame and what kind of actual actions the Fed will be taking at this point. So that's what we were looking for. Watch list. I'm trying to stick with the leaders in all these industries, and I think I'm trying to broaden that a little bit more. What I don't have on this list is BA, which is something I want to start incorporating a little bit more. I think it's good to hold a solid value play coming into this year, because I think there's going to be some big rotations this year, especially when rates actually start increasing. You're going to see, I think, massive rotations. And then again, at the back half of this year, I think you're going to see a massive just push in big, large caps, mid caps, and small caps towards the back half of this year. Once all that stuff starts coming back into play, I think that will occur. But again, we have to get those rate raises. And then if there's any other black swans that can occur, just be aware that we're not crashing. I don't believe we're crashing. The market will still do very well. It's just getting over this hurdle of the time frame and the rate raises and get that out of the way, that first initial sting, and then pretty much go from there. So Tesla, Google, Apple, some big ones I really want to watch for big tech. Shop, I would put Amazon on here. Amazon would start running here as well, especially going into big earnings. But Shop is also one I really want to watch. Asml chips, I think, are going to be in NVIDIA are really going to be big for this earnings. So ASML will be the first chip, I believe, that's actually going to report. Once, if they do really well, you can expect a courtesy pop from the rest of these chips. The chips are already pretty high, but considering what's been going on over the past week with the rate raises talks and stuff, it's been kind of beaten down a little bit. Roblox, something I want to keep an eye on. A lot of these things are starting to get good levels. Airbnb could be a strong value. I want to keep an eye on that. Bitcoin's been beaten down so bad, but I think it's giving you a good position in for the year. I think Coin, they got NFTs coming towards the back half of the year. I think they're just going to really amplify just the crypto space in general. So I think Coin would be a really good take, a good entry point towards this correction that we're getting this year. So a lot of these are kind of like forward projecting into the next couple months, next couple weeks. I think these are ones you really want to keep an eye on. And so I'm primarily focused on these. Yes, I still add Amazon, BA, and a couple other ones, but I think you should stay with the leaders in the industries because the money will be funneled to them. Apple, Tesla, your Googles, those ones are rock solid. I could even add Facebook in here as well. They're very rock solid as well. But a lot of the ones like your Snaps and your Planter, right? They're great companies, but they're not established. And right now, people are going to drop their money into established companies at this point. especially with a lot of uncertainty with the rate raises. And then again, back half of the year, I think everything will start picking up again and start pushing. And that towards that around that time, we can start taking positions in some of those mid cap, smaller caps for longer term swings. So SPX again had that dip, and now it's consolidating. Been 2 days essentially bouncing back and forth between the 20 and the 50. I wouldn't actually be surprised if we continue to stay in this range come till Wednesday, and we get that beige book, get some more information. We may continue to play this game going all the way into the Fed meeting. I think it could be very much possible because of the uncertainty. The beige book might provide some insight, enough insight to break us out of here or break us down. I think if anything, I think we could possibly even see a little bit more of a breakdown, possibly hit this weekly down at the 45.83 as a first weekly support. Still leave us in an uptrend because still be a higher low and continuous pushing us forward. Again, biggest thing I'm concerned about is I don't like the fact that every time we make an all-time high, we just the all-time high lasts maybe a couple hours, a day or two, and then we just sell off. And I don't like that. We haven't been just ripping up. Again, it's mainly because of Fed and how they're approaching everything. Now, Bitcoin, again, taking a massive hit. It's already down to 40K at this point. But I don't see this correcting so much that we're back down into the 10K mark. I don't think that's going to happen. I don't think that's a possibility with the mass adoption, and especially with the popularity of NFTs are really driving the technology, is really driving the way a lot of things are going to work in the future. So being said, I don't think this is going to go down to 10K. I don't think that's a possibility, but nothing's impossible. But from this point, I think we're still good. We're holding this level. This level is important. This is one I've been talking about. Is essentially that 41K mark. We break that. Then the next one we got is essentially the 30K mark. We break that. Right, every round number essentially, you're going to have strong support until we catch a bounce. Again, if you look on the daily, we're well below the 200. So normally that's a reversal around the 200. We try to reverse, but we also got a lot of news on regulation and everything today. So this week and everything with crypto. So it really just kind of crushed everything. Overall, it's still very bullish for crypto. Just means it's going to be around. Fed's been talking about creating stable coins. And so all that is still very bullish. It means in trying to figure out taxes with crypto. So you have to understand that crypto is here to stay. It's not going anywhere. But until that point, you're going to get a lot of volatility. So the first one I have is obviously Tesla. Now, Tesla had that wedge break and had a nice little run here. It's been breaking some major supports. So I actually expect this to come down quite a bit. I think some key levels here to really watch this week is essentially that 990 mark. Although you got the 1K mark, if it does break that, I think in that 990 mark, I think we can possibly come all the way down. You got the 960 mark is another mark to watch out for. Again at 940, and then your major support here is at the 900, which is something I think even if we do any kind of correction, I think we could make one last dip below that 1K back down to 9 could be a possibility. I don't think that's really going to happen. I think we could correct around that 1K mark and possibly head up. But you never know on that rate raises. Tesla was one of the ones that always gets hit pretty good, so you definitely have to watch out for that. But I think, again, moving forward, you definitely want to stay with the leaders. Google also being one of them. It's taken a massive beating. It's at a really good support and been holding this level here, essentially the 27-26 mark. Again, I'm looking for 26.79 mark as well as another big support here. Now we did try to retest this 27.88 mark after the break, and we got rejected, and now we're back down. This is a really good range. Google actually played this range here for a while before it had the break up, and then obviously the break back down. So really watching this 2670 mark. The 200 is way down here at the 2625 mark. If we could be so lucky, as you see down here, we did have a wick. As soon as it hit that 200, it was straight in the day. Google bounced straight up. These are the kind of plays you look for when stocks like this that are incredible companies. And when they start getting around that 200 is when you buy heavy. Typically, I don't see us crashing and this breaking down to some ridiculous numbers. Yes, I understand rate raises and everything are going to happen, but you have to understand that I think once we hit that and get a double bottom here on the 200, I think we're solid from that point going forward. I still see we're still very bullish in the market. The market always goes up. You can zoom out on some high time frames and realize that the market will continue to go up. So right now, I think it's just temporary. There's still a lot of room to sell, especially on big tech, and you don't typically see Google make too many trips down to the 200. So when it does go to the 200, it's typically good to load. So the 200 is essentially sitting around that 2635 mark. It's not saying it has to hit it. I think you get lucky if it even touches it. A lot of times it'll bounce right back. So even that 2650 mark, really start looking heavily at the Google and buying at that point. Again, not financial advice, but when it gets close to that 200, you can almost guarantee to get a reversal at some point, especially with the really good companies like this. You'll be lucky if you can hit that 200 unless the market's crashing. Apple in itself, another one of the companies to really watch. We still got a lot of room, still haven't even hit the 50 on the daily. Apple's just been, in my point, it's a great company, but it's been really junky in a lot of the ways it works. It's choppy to go up, it's choppy to go down. That's just really kind of how Apple works. It'll run for 3 or 4 or 5 days and then just chop for a month or two. So both earnings coming up and stuff, they actually have earnings set for the 27th. So yes, looks like big tech might be actually around the FOMC meeting, which is funny because we got that major news and then we also have big tech around that same time period. So it'll be interesting to see what Apple has here, but looking forward to that. Again, key level here is the 168 mark. Look for a bounce there first. Once it does bounce there, look for a retest of the 175. Then from that point, if it's going to actually break back out or if it's going to actually slam straight through, back through the 50s, the 168 mark, and then continue to sell off is what's important to watch. And something I've always explained in my videos is that that's why I use the EMAs, the 20, the 50, and the 200, because those are the best supports, in my opinion, on the daily, because you'll get that retest for initial break, retest of the 20, test the 50, retest 20, and then you typically either will break back out and continue, or you will slam straight down. You can guarantee that when it starts coming back down, it's going to break that 50 after that second attempt. And then the next one I do have is Shop. Shop is taking a massive beating. It's actually sitting around the monthly support. And this is why I wanted to keep Shop on watch, because I think if Shop breaks this 1173 or 74 mark and gets back up here on the daily, I think this is going to start really ripping moving forward. And essentially, I've always had this kind of running joke that if Shop breaks below 1K, it's essentially insta buy at that point because this thing rallies and it has a cult following. I really like Shop, especially in the e-commerce space, is very strong. So moving forward, this is one I definitely want to keep on watch. Asml is a chip. It's another chip play going into earnings. There's been a strong base, essentially around here at the 730 mark. We did get one nice bounce off it already. I did a retest. I want to see if it holds at 730 mark again coming into this week. Again, earnings is in 2 weeks. If the market sells enough and it hovers around this 370 or 730 mark. I want to build a position in this going into and get that earnings run up, then sell beforehand, and then see how they're doing on earnings. If they do crush it, try to grab it after that point, and then go back to retest this, essentially that close to that 900 mark for ASML. NVIDIA is the same way. A lot of stuff does look the same. So being said, you got NVIDIA. It's been holding this 270 mark. It's been actually playing a pretty big range here. So if as long as it holds this, I think NVIDIA will be good going into earnings. I'm not quite sure when their earnings is, but that's something I have to look up. I don't even know if they've announced earnings yet. But if ASML does well, look for sympathy plays on all your chips, so your AMDs as well, MU as well, or some other ones to be watching. But I do really like NVIDIA going forward. It's taking quite a beating. A lot of these big growth tech stocks have taken a beating. NVIDIA is already down 22% from the all-time highs here. So a lot of these are correcting 20, 30% already. They've already had a correction. So they've already normalized, and that's kind of what we're looking for in tech, is to get that normalization. So you're looking for that 20, 30% correction from the top. And some of these have already done that. So at this point, it's more so if the rate raises come out, we may not get, when they announce it, if they give any kind of like leeway to when it's going to happen, I don't think that's really going to have that much of effect. Again, we're already down 20, almost 30% on some of these. We might get that little bit 5% more correction on it, and then start really ripping from that point. Again, I don't see some massive parabolic move to the upside till later on this year. I think you're going to get a lot of penny stock moves, a lot of pump and dumps, which you've already been seeing over the past month, and it seems almost a month and a half already. So shorter scalps, shorter swings, and definitely take profits on the way up for sure with this market. Roblox has been getting beat down really bad. I do really like Roblox going forward. I mean, they're primed for all the metaverse stuff already. They have everything already set up. They have a very young generation that will lead them into many, many years of profitability, and something to build off of already. So this, I think, will do very well. Do I see it breaking back down to IPO prices? I don't know. If we can get it back down to the 69, that'd be great. I don't see that happening. It's already at a strong support at this 85 mark. I have taken a small position on this, but to really gap fill, we'd probably come back down to the 78 mark. I don't know if that's possible. We'll have to see, especially when big tech starts hurting. Roblox normally does really well, so we'll have to keep this on watch. But I want to keep it going forward, especially going into earnings. I think Roblox, after last earnings, crushed it. So I'm trying to build a position now in it. Moving forward, Airbnb is also the same way. If I can find Airbnb on here, that would be great. Airbnb finally got back up to 200. It kind of struggled all year with pandemic stuff, but now it's really been taking a big hit. We did actually hit 150 at one point. One I do want to watch moving forward. I think, especially with all the variants and COVID stuff, I think Airbnb is pretty in the clear. And I think this year will really be a big year for Airbnb. I called Airbnb as the big recovery runner for 2021. I think that will possibly even continue 2022. I think Airbnb is going to do big things this year moving forward, especially with everything kind of normalizing a bit more. Again, nothing will be quite normal the way it was, but as close to normal as possible. I think Airbnb will be one of those places where people can isolate, still have that unique feel to their trips, as opposed and personal feel to their trips. So I definitely have to see how that goes going forward. And then one of the last ones I have here is coin. Yes, Bitcoin's been taking a beating, but I think this level here at the 26 is important. I want to see if it does hold here. Watch this wedge. As soon as we break this wedge, I think it could start heading back up as well. watching that 200 mark ultimately, I think is what it is as well. So moving forward, if it can attempt that 220, hold that 220. If not, 200, I think is the next level we do have. But it's also taken a major beating. I mean, this thing almost hit 400 at one point here. They have a big year coming up with NFTs. I think once earnings really shows what it's about, Coinbase is really going to go parabolic. It's already almost at 40% since the top. So that's just telling you, yes, it does correlate with Bitcoin as well. So you got to keep that in mind. But I think the whole crypto space is getting ready to launch here pretty soon as well. So if you've made it this far, I know this video has been very long, but there's been a lot of information that came out this week, a lot of stuff we need to start looking out for coming into the new year, and try to set up there's a lot of stuff that is really good pricing right now, but you have to understand that it will switch. I think once we get that the rate raise, the initial rate raise, will start switching over and we'll start actually pushing back up, and these are good prices to start buying at because you probably won't see these again for a while, and we're kind of getting that opportunity right now. So if you made it this far, hit the like button and subscribe if you haven't done so already. Until next time, I'll see you guys later.